Good morning. This is Tim Barnby, the No Nonsense Trader. I wanted to talk to you today about a couple of the trades that we took on the Market Movers Edge subscription this week. The first one was on Tuesday. Both of these trades happen to be the USD yen. Back on Tuesday, no big surprise on why I took this particular trade. You can see this really nice pin bar right here, and I placed a trade to sell the yen at 98.65 with a stop loss of 98.92. So you look right here. This is about the 90. Let's just put this here and get a little bit more specific. You can see right here. This is about where we bought or where we sold. I'm sorry, and I put the stop loss up here, up above that the pin bars, in case we were wrong, and it just continued to move on up. We actually I placed another call to close half of this at about, where did we close? Let me look at my notes here. 98.35. At 98.35 we closed half. Now that made this trade free. There's no way you could get stopped out and lose money at this point. And I knew that we had some serious support right here at the 98.08 level. So as we were coming down here, it touched once, retraced, touched again, retraced, and we closed out. Actually, we closed this thing out at we got 56 pips. So we closed right around in this area right here. I don't happen to have the price that we closed it at right here. Where was the stop? We closed right around on the 98.08. We got 56 pips. And then it did retrace, and it finally did penetrate on the third try. But that was about 3 in the morning, and we had some news coming out and things like that, so I didn't want to play with it. Never let a good trade turn bad. Okay, so now we have another trade that we took, same pair, Thursday. And what we were looking at here, we right here on this trend line, this is let me zoom out here a little bit. You can see there's this trend line right here that was from all the way back on the 17th, had another touch on the 21st that we actually made our other sell on. Price came right back up to it, and it happened to come up to it right at the 61.8 fib too from this most recent swing. So I thought that was a pretty high probability buy or sell. I'm sorry, I keep saying buy, and it's actually a sell. So I thought it was a really high probability entry. So we sold. The call went out at 9:39 my time yesterday morning, Central Standard Time, to sell at 98.19. So by the time we were able to sell, basically it was already moving. I don't like market orders, so basically I placed a call to sell at or greater than 98.19. Some people got in at much better rates because they, as it would move up, they got some really good fills. And the stop loss on this was 98.46. So right up above the trend line here, a few pips above the trend line, and the take profit on this was 97.66. So the original, I figured this thing would probably give us get us down to the let me get this here. I figured it would get us down at least down here near this ascending trend line. Of course, price action moved around a lot, and eventually it did a lot of retracing and a lot of jumping around, and we finally did get to the 66 level, the 67, 66 level, and people took profit. Now I also made a call at 109 for people to actually wait a minute, let me step back for a second. By 11 o'clock in the morning, this was a free trade, by the way, because I put out a call to close half, so there's no way you could lose money at that point. So we closed half. We had recouped anything that you could possibly lose on a stop loss. Price action moved our way, and we had one touch almost to the 66 level, went to 67. I closed out at that point, and I sent out a message to the members, the subscribers, to watch price action here. It was either going to penetrate on the next hit, or it was going to retrace again. So basically, when I said that it would go down to the 30 level, the 97.30 level, it actually went down much deeper than I thought it would. I didn't think it was going to get down here to the T2, down to the target 2 fib. I thought it would only go to the target 1, but it actually went all the way down to the target 2. So anybody who actually stuck around, congratulations. Worst case scenario, if you followed the trade calls, was 42 pips on this call. Worst case. Other people got 56, and somebody told me that they got the whole thing. I mean, they got down here to the T2 level by accident. But either way, it was a great trade. Even the people who got 42 pips, I mean, that was when the trade was actually stopped out. We had moved the stop loss to here, and then the thin liquidity after New York closed just wiped that out, and then of course the Asian market opened and took it back down. So anyway, it was a great week. We got 141 pips in gaps. We had the 61 pip gain on Tuesday, a 42 pip or a 56 pip gain Thursday, and we got 20 pips on a scalping session. The news made the market a little intolerable to trade with my system, so we stopped that early. Anyway, that's it for this week, and I will talk to you next week, and thank you very much.